In this video, we will explore steps to consider when planning your finances after receiving an inheritance. We will discuss inheritance tax, capital gains tax, investment strategies, and considerations for the Help to Buy scheme. We will also include a disclaimer to remind viewers that this information is for educational purposes only. Here's what we'll cover in today's video. First, the tax implications you should consider, followed by some investment strategies for growth. We'll then touch on the Help to Buy scheme and finish with some important disclaimers. First, we will explore the tax implications of receiving an inheritance, which includes understanding inheritance tax and capital gains tax. Inheritance tax usually applies to amounts above a designated threshold, which varies by country and locality. Smaller inheritances, like the example of $30,000, are typically exempt in many places. Capital gains tax, on the other hand, relates to profits from selling assets received as part of the inheritance. It's important to understand local tax laws and consult with a financial advisor specializing in inheritance tax. What is not typically taxed when receiving an inheritance itself? Your options are inheritance tax, capital gains tax, sales tax, and income tax. You may pause the video now to think about the answer, and then we'll discuss the answer in the next section of the video. The correct answer is capital gains tax. Capital gains tax applies when you sell the assets at a profit, not when you receive them as part of the inheritance. Now let's transition into investment strategies. A thoughtful approach is crucial for managing an inheritance to ensure both growth and liquidity, especially if you have future financial plans like a Help to Buy scheme. For low-risk and high-liquidity options, consider high-yield savings accounts and short-term bonds. These protect your capital while providing growth. If you can bear some moderate risk, index funds or ETFs expose you to market gains with diversified portfolios. Don't forget diversification, be aware of fees, and seek financial advice from advisors. Lastly, we look at the Help to Buy scheme. It might seem tempting to pay off your mortgage early, but ensure it makes financial sense, such as taking advantage of lower interest rates. Avoid paying off your Help to Buy mortgage early unless there's a significant financial benefit, such as lower interest rates, that outweighs the loss of cash liquidity. Always discuss such decisions with a financial advisor for tailored advice. Please remember, the information provided in this video is for educational purposes only and should not be considered financial advice. Always consult a qualified professional before making significant financial decisions. Thank you so much for watching our video on planning your finances after receiving an inheritance. If you found this video helpful, please give us a thumbs up, share it with someone who may also find it useful, and subscribe to our channel. Don't forget to leave your thoughts in the comments below.